There are two kinds of people in the world: those that believe in technical analysis and have over 50 lines on their charts, and those that think technical analysis is complete bogus. In this video, you're gonna find out which one you are. Welcome to Whiteboard Crypto, the #1 YouTube channel for crypto education, and here we explain topics of the cryptocurrency world using analogies, stories, and examples so that even your grandpa could understand them. In this video, we are going to be explaining what technical analysis is, how it can be useful, and even some common patterns that you'll be able to identify yourself by the end of this video. Also, about 2 months ago, I stumbled upon a fantastic crypto creator who wasn't reaching many eyeballs, even though his technical analysis content was the best that I'd ever seen. So I reached out to him, and he's going to help with this video. If you're impressed by the end of it, I'd really appreciate it if you head over to his channel and watch a video or two to see if you agree about his quality. Let's dig in. Technical analysis is one of the things that is overused by people who know what it is and undervalued by those who have never used it. When it comes to investing, not just in cryptocurrency, the main steps to make a profit is to buy something at the cheapest price possible and then to sell it at the most expensive price. Now, while that's much easier said than done, technical analysis is a great tool to help make that possible. It's worth noting that technical analysis is not a holy grail and will not make you wealthy overnight. It's not designed to do that. In fact, some traders will even only make trades once a month, but it will give you a small edge in the markets. Even a 1% edge in something can be much greater or more useful than you think. For example, casinos make millions of dollars every single day around the world because they have a simple edge over the people that are playing against. Sometimes that edge is less than 1%, but over a long enough time period with a large enough volume, that is all you need. In fact, gold medal athletes in the Olympics win by less than 1% all the time. Now, before we get off topic and go down the rabbit hole, I want to help you understand some of the most important concepts when it comes to technical analysis and how you can use it to give you an edge when it comes to investing in cryptocurrency. The first topic I want to cover is something that doesn't even have to do with charts or covering technical analysis. Instead, this concept is probably the most important one to remember when you're investing. The most important question to ask yourself is who controls the markets. Now, your first thought may be whales or institutions or maybe even big market movers. And while those are all great guesses, the real answer is that the markets depend on you and I and the millions of other people who are participating in the market on a daily basis. All of these people control the markets. So what I'm trying to get at is that people, by nature, are unpredictable. So therefore, the markets are unpredictable. Some guy has a car accident and he gets sued. And because of that lawsuit, he has to liquidate all of his Ethereum. Maybe there's some woman out there who just realized she's pregnant and so she sells half of her chain link so she can have some cushion money. Or maybe there's an XRP whale that woke up one morning and they start dollar cost averaging out of their XRP bags because they had a dream that the whole thing was a scam. Now, these things might sound funny, but these things happen every day, every week, every year. You cannot predict the lawsuit, the pregnancy, or the dream, but they lead to tons of money being moved in and out of the markets. There's a common misconception about technical analysis, and many believe that if you can just find the right tool or the right trading plan, then you can predict the future and make millions. But the truth is, nobody knows the future. Your only goal with technical analysis is to find a plan that works for you, define your personal edge in the market, and never let your emotions get the best of you. Technical analysis is simply a tool to help you. Now that we've gotten the theory work out of the way, let's actually dig into reading a candlestick. Now, candlesticks are a way to look at price action within a specific time frame. A candle is very confusing if you have no idea what you're looking at, but I'm about to teach you everything you need to know about a candlestick. Candlesticks turn 4 points of data into a single image. First, you have the price that the candle started at. Now, this is actually depending on whether the candle is green or red. These points will be different. For example, on a green candlestick, the opening price is the bottom of the base, or the body of the candle. The other end of the body is where it actually closed. On the other hand, for a red candlestick, the opposite is true. The opening is the top of the body, and the closing is the bottom of the body. So the color tells you which one of these is the opening and which one is the closing, but the 2 points of the body tell you where the crypto opened and closed within that specific time frame. Now, this time frame could be 1 minute, it could be 10 minutes, an hour, or even a whole month. They're technically fractal in nature, but we'll talk about that later on. So now that we've gotten the big body parts of the candlestick out of the way, let's move on to the thin parts of the candle, and these are called wicks. Now these are evidence of where the price went but then recovered. So let's take a look at a green candlestick. This candlestick tells us that the crypto opened here, went all the way down here at one point, and then came back up to here at some point, and then ended at this part of the body. That's how you read a candle. It's that easy. Now, I will say you may need to watch that a couple times, but all candles work this way. And once you know how to read them, it all starts to make sense. Now, some candles give you insight into the market. For example, a candlestick that looks like this means the price went way up, then came back way down, and that usually means that the buyers were exhausted. Or in other terms, there were more sellers than buyers, and that the price of whatever this asset is might drop in the future. Alternatively, a candle like this is where the price went way down and then came up, and that usually means the sellers were exhausted, and that the price may go up in the future. These are not always true, but they give us good ideas about what's happening in the market. Now, moving on, the rest of this video includes topics that will be a little difficult to explain with a whiteboard, so I'm going to go ahead and let Christian give a whack at breaking them down.
So right here I have a diagram basically breaking down the three phases of the market. First we have an uptrend, a downtrend, and consolidation, which is sideways movement. An easy way to think of it is that an uptrend is a series of higher highs, which are these, and higher lows. And as you follow the arrows, it looks like the market is going higher, and we know the market can't go only up, there needs to be retracements in it. A downtrend is the same thing but in the opposite direction. So you have a series of lower lows and lower highs, lower lows and lower highs. And that is what determines a downtrend in its simplest form. And a consolidation is when price gets stuck in between two price points and just continues to consolidate. Now to show you this in a real data structure or real technical analysis chart, we have Bitcoin on the 4-hour chart starting all the way from the beginning of January, ending to around July 20th. So you could do this on any time frame because everything is fractal, which we'll talk about later. So I'll actually draw this out for you to make it even more simple. So we have the market coming up, coming down, a series of higher highs and higher lows, and this is an uptrend until we start to make lower lows and lower highs in the market. And then finally, right in this area, the market consolidates in between the price points at 36,000 and around 29,000, and the market just starts to go sideways. And then as we go on even farther to the right side, we could see that the market starts to give us another uptrend until it starts to give us a downtrend. So the market goes through these three phases over and over and over again, and as you scale down to lower time frames, they start to happen more frequently. And if you get to higher time frames, it is a lot slower, but the price movements are a lot larger. So I'm hoping that this really exemplifies how simple market structure can be and how easy trading can be sometimes, because really there are only three directions the market goes: up, down, and sideways. Now that we have a common understanding about what candlesticks are, and when you put them all together, they kind of tell us a story of what's happening within a certain asset that you're looking at. So for example, we're looking at Bitcoin US dollar, and on here we are currently on the weekly. So each one of these candlesticks represents 1 week's worth of price action, telling us where price has been over that week. Now, trends or trend lines help us understand where we are in the market and where we might be trending to, whether that's a higher price or a lower price. Now, there's a couple really important things to know with trend lines, and while they're very helpful and they're very simple, there's a couple of key things you need to understand about them. The first thing is that they're very subjective. When I see a trend, you may not. And when you see a trend, it may not be very obvious or evident to other people. So trend lines are very subjective, just like many other things when it comes to technical analysis. So always keep that in the back of your head. The second thing that we need to understand is that a trend line needs to have two touches. For example, I have this trend line on the weekly that you could see the first touch is back around here, the second touch connects to right here, and the third one is typically where people are anticipating price to get to. Now, not to put too much weight or time into trend lines, the last thing I want to go over is that there's three main trend lines that I like to look into. The first one is the macro trend. When I'm talking about macro, I'm talking about where price is going on a very long time scale. So for example, when we're looking at the weekly, the monthly, or the daily, as you could see, the time frame of this starting from back here This is a lot of price action. This is currently around 658 days worth of data that we're looking into. So you can almost consider this as the macro trend, right? What is the large scale of the market? But if we come down to shorter time frames like the 4-hour, 1-hour, or anything below that, that's when we're looking at minor trends. And this is actually something that's happening right now. So we're starting this trend all the way back from November 10th, and it's actually going to price action to where we are on December 30th. So as you can see, we are currently in a minor downtrend on Bitcoin. But if we were to take a look back at the weekly, you can tell that we are somewhat in a pretty bullish state. So these are always good to consider what time frame you're on and what trend you're in on that time frame. Now, the last thing I want to get into is a counter trend, and this might be kind of confusing, but I'm going to make it very simple. Now, when we're talking about a counter trend, the first thing we have to identify is what is our main trend. So if we're looking at Bitcoin right here, we're looking at price action from the end of January going all the way to around the middle of April. Now, you could pretty easily tell that Bitcoin was in an uptrend just by looking at price and plotting this trend line right here. But a counter trend is the opposite trend against the bigger overall picture. So currently we're in an uptrend, and the counter trend would be anytime price is going down against the main trend. And as you could see, this only happens for a little bit, and then we break out and continue with the main trend. We go down for a little bit and break out with the main trend. Go down and break out. Now, an indication that this might be over or that our main trend is getting broken is when it breaks below our main trend line, as you could see by this white line, and that is indicating that now we might be switching our trend line to the opposite direction. Now that you know what market structure is and in what directions the market moves and in what phases, it is also important to understand that the markets are fractal. A fractal is simply a never-ending pattern. It's a mathematical phenomenon, and it's basically just a self-similar pattern across different scales. So let's hop into the charts and I'll show you exactly what I mean. So as you can see right here, we have a pattern of a large triangle that is made up of smaller triangles. And the deeper we look into the actual triangles, as you can see right here, it seems like it's a never-ending pattern of bigger and smaller triangles, and it just continues to zoom in and in. And you could actually look this up on Google and get a better understanding of it. But basically, I have two Ethereum USD charts pulled up for you. The first one is the 4-hour chart, and it dates from September 16th to around October 6th. The next chart is the 15-minute chart, and this one dates from December 12th to around December 16th. And you could verify that by the scale down here and the numbers up here. So the first one we have is the 4-hour chart. The first thing that happens is that the market drops, and then we have 3 touches on a floor or a support, and then we have a big bullish move off of that level. If we jump over to the 15-minute time frame, completely different time, completely different scale of candlesticks. We have a move down, we have 3 touches into this support or this floor, and then we have a large reaction to the upside. Now you can see that they're not perfect, but the whole point of this is that you can go even down to the 1-minute or the weekly chart, and you can compare these together, and the market moves in similar ways. And we all know that the market is not predictable, but it is not random either. So now that you know what fractals are and that they're in the market, it's your turn to go hop on the chart and go find a couple. So if you've made it this far, I just want to thank you for bearing with me and my examples, and thank you for not thinking that I'm too boring. Maybe you have, but you've made it this far, so congratulations. But the last thing I want to share with you are reversal zones and patterns. There's a saying that goes, in order to understand the future, we need to look at the past first. The markets may be unpredictable, but they are not random. And with this knowledge, we can use it to our advantage to understand what price might do next. So right here, I have the entire 2021 Bitcoin chart almost summarized for a lot of its massive uprises and downfalls. But as you can see back here in February, this massive uprise came from a lot of institutional support. Companies like Tesla, MicroStrategy, and MasterCard were all publicly supporting Bitcoin, which made it rise. Then we had the summer FUD dating all the way back in May, even starting back in April. And then at the bottom of it, Grayscale announced that they bought $1.5 billion of Bitcoin, which made it rise. And then China again banned cryptocurrency once again around the middle end of September, which made it drop. and then Bitcoin ETF hype pumped it up again. And then right here, our most recent rally was our Santa Claus rally, which takes in effect the last week of December. Now, while all of these events are unique, these are massive price points or movements in the markets. As you could see, the market comes up and comes down violently. Usually the market kind of flows up and down. It has an ebb and flow to it. But when these massive fundamental or news events hit the public, we could see massive changes in the market. And what we could actually do is we can map this out all the way across, and we can use these as levels of future price reversal zones. And you could see if we map these out, it's no coincidence that over and over and over again, when we see support or resistance right here, we can see it over here as well and over here. Even though that this is what a one-time event, this summer FUD, you could see that a lot of traders and investors look at these levels because this is where price moved on a very large scale. And if we continue to take out all of these, you could see that it's no coincidence that these levels continue to react into the future. So while something big might happen once and it might not recreate itself in the future, those levels will be remembered by the traders and investors in the future. So these are important things to remember. And even if no big event happened, but we hit an all-time high or a local low, those are important things to remember for the future because it's an indication that something similar might happen again in the charts. So that's the last thing I want to leave you with. And just for fun, go ahead, go on a chart, find some really important price reversal zones, go ahead and see what happened in the past and then what happened in the future as well. So I hope you guys enjoyed everything in this video, and I'll pass it back to Theodore.
Alright, if you enjoy this video and lessons about technical analysis, I have a big ask for you. Could you head over to Christian's channel and watch one of his videos and let me know what you think of them? He's been growing like crazy, and to be honest, he is my favorite technical analysis YouTuber who doesn't put shocked faces on his thumbnail or just sprout off random price predictions without any evidence. Either way, we both want to thank you for watching this video. I really hope that you learned something, and most of all, I hope to see you over at Christian's channel.